Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is 5:58. I'm late. I'm sorry. I apologize for starting these shows, the live streams, kind of sporadically, but for whatever reason, it's been a heck of a time trying to get to sleep these past several weeks. So it makes it kind of difficult to get out of bed. I mean, that alarm clock goes off, but you hit snooze once and all of a sudden it's a habit. So I'm working on it. Just stress, I guess. All right. So let's get to what we want to talk about here. First, we're going to talk about the headlines. Then I want to talk about the pre-market futures. And then I want to talk about tonight, which is Thursday Night Futures Live, 6 p.m. Eastern Standard Time. That's where we're going to go over the weekly charts, folks. And we're going to review the charts as we proceed into the new trading week. Yes, Thursday night begins next week's strategy session. So we're looking to see how we close out the week. Do we close strong? Do we close weak? I want to also talk to you today about the price action of the market, leading stocks beginning to break down. We're going to talk about a few of those. And we're going to talk about the pre-market activity as well. Copper, huge move overnight. On the headlines from yesterday, Nomura, 1.3% yields are fine. If they hit 1.5%, stocks will be hammered. I went over this with members yesterday on the market wrap session, and this is rather a joke to be coming out with this right here, right now, because when you take a look at the 10-year yield, and if nothing else, and I'm going to revisit this tonight, live, if nothing else, we've been very steadfast on this. Beware of the 10-year yield. Nomura is a little bit late to the party. We've been talking about the threat of the 10-year yield for weeks and months. Here's your W formation, double bottom setup, classic. We moved higher. We broke out. We broke out 2 weeks ago, 3 weeks ago. We retested the breakout point in red. Last week, this week, we gapped up higher. What does that mean for stocks? It ain't good. The last time the 10-year yield was up at around 2%, the economy and the stock market buckled. Normalized 10-year yields going back 25, 30, 40 years is 5%. This economy is so weak and shedding jobs. By the way, jobs data today, initial jobless claims. Every time we hit that 2% mark, we begin to buckle. But that was before we loaded up on trillions upon trillions upon trillions of dollars worth of new debt. So what's the magic number now? I said begin to watch here when we hit this line in red. Watch and see whether or not stocks hold up. And you've already begun to see stocks buckle. Look no further than, let's bring up Tues. Down on the week, yes. 1 week does not make a trend, folks. We can close up for all I know. I'm not calling a complete market top, although we are short the market now. When you take a look at the small caps, thus far this week, nearly an outside reversal bar. We have taken out the lows of last week. One might argue, those technicians out there, well, Bob, what we did is we filled the gap from last week. Valid point. We'll know better next week. Do we fail to take out this week's highs? Or do we break down to new lower lows? This trend is unsustainable. The volume at which we've been trending up higher, unsustainable. It's been declining sequentially and below average. I got to bring up my comment feed here. Bear with me 1 second, folks. Okay. Let me take this. So what you're looking at right now, for if you're wondering, is the back end for the live streams. Nobody else shows you this stuff. There we go. All right, so I'm bringing it up on my other monitor, so that way I can see comments as they come in. All right, cool. That's better. All right, I'm going to get rid of this. Better. Okay. So what we want to do today is just simply take a look at some leading stocks. QFIN is one. By the way, this segment is brought to you by TrendSpider. TrendSpider is our go-to platform for automated technical analysis, and I would encourage you to outsource your technical analysis, automate your grunt work, speed up your analysis, and improve your accuracy by leveraging the data of TrendSpider. So there's a link below, 35% discount code. It'll help you to reduce costly analytical mistakes, find winning chart setups, time your trades with precision. They have a link here, demo, tour, very, very good. 7-day free trial offer. And if you want to know how to use it and you're worried about getting involved with something that it's too complicated, they have so many tutorials, it's ridiculous. So you never left hung out to dry. If you need support, you can either ask me or reach out to the folks over at TrendSpider. Say I sent you. We do a lot of business together. In fact, I believe in them so much that I offer it with my silver and gold level memberships. So 35% discount code. Use that link below. Look at this. They added more. These guys are nuts. This is all free. So join up today, TrendSpider. Okay, let's get to it. All right, so stocks like QFIN, this is a daily chart. Yesterday, it flashed an outside reversal bar. If you take a look at this raindrop chart, very poor close, a lot of volume into the close. Taking a look at it from a weekly time frame, this is no great shock. This stock has been on a tear. So to get a reaction to the downside shouldn't be a shock to anyone. So if you think that simply because on a daily time frame we had a down day yesterday, it's time to step back in, I would strongly encourage you, be very, very careful. Go back to the weekly charts. Identify where we've been and ask yourself the question, is this sustainable? And if we close out the week at or where we're at low now or lower, that is a bearish key reversal bar on the week. Next chart up, PLTR. Remember, these are leadership names. Daily chart. Folks, let's take this off. Okay, that's better. We have a double top here. Not only do we have a double top, we have a confirmation breakdown. We have broken to new lower lows. We flashed a bearish reversal bar. This is when I like to say you cannot fall in love with stocks. All stocks are speculative, no matter how strong they are. So this stock is under clear distribution. We have a confirmation breakdown, double top, lower high, now lower lows. This is a signal by the market that you're getting a bit of sector rotation, and that's at best, or you're beginning to see signs of a market top. And this is only a few. Now you can just take a look. I subscribe to IBD. And look at all these down stocks yesterday. Not all of them top performers, just PLNTR. But beware, you're seeing signs of weakness in the market. Now, to the pre-market activity. The U.S. dollar. Hello, Kay. Hey, good morning. He caught me with that name. Matt Carter. Good morning, Bob. What a day yesterday. Humdinger. Yeah. I haven't heard that phrase used in years. That's great. Yeah, I mean, I think that we're beginning to see cracks in the dam. The fact that you had the Federal Reserve come out yesterday, or the minutes released yesterday, and they were rather flippant about inflation and letting it run hot, along with the PPI data that we got yesterday showing that inflation was running hot. That did not bode well. So one thing I picked up on, and I discussed this with members, was that gold did not rally. It should have. Silver did not rally as it should have. It did close up, but it should have rallied. And I believe the reason being is that we saw strength in the U.S. dollar for whatever reason. And the dollar this morning has given up its overnight gains. Double top here, new lower low. Let's check in with equities. This is gold. This is a 1 hour time frame. Let's pull back here to a 4 hour chart. You can see that we've been in a downtrend channel. We tapped the lower band of that downtrend channel yesterday. I wanted to see if yields would begin to pull back some and the dollar pull back some, thus allowing for a rally in gold. We're beginning to see some weakness in the dollar, but it hasn't broken yet. So Mikado has a comment in here. So there was institutional selling, no gold, silver gains, no Bitcoin. Yeah, so the way you read into that is that, how do I put this? Let's go back for a moment. Let's go back to let's go back to the COVID correction. All right, S&P 500 declined dramatically. This is a weekly chart. Excuse me. So obviously S&P 500 corrected. But let's take note of something else here. Gold did what? It also corrected. Right? SILJ. This is the silver miners. Good morning, Paul. Good morning, WS. Where are my silver miners? What happened here? Behind price. Oh. Well, I should have put this in silver, but the silver mine is corrected as well. So what may be perceived as a safe haven prior to a sell-off, meaning gold, the silver miners, Bitcoin, you know, we could bring up Bitcoin. What's the symbol here for Bitcoin? All right, so even Bitcoin, right, supposedly the safe haven, right? Here it is in gold. It declined as well. Okay, so why did that happen? Why was there not a safe haven to Bitcoin or gold or the silver miners? What happened here? What we need to keep in mind is that during a bull run, as I mentioned earlier, all stocks are speculative. Everyone, not everyone, I shouldn't say everyone, it's painting with a broad brush. Most people, many people are on margin. Now, the little trick that brokerage houses like to pull is that when a sell-off begins and everybody's all levered up, what's the first thing that they do? They tighten up margin requirements. So even before you get a major collapse in the market, your brokerage is already taking the legs out from underneath you because you're on margin. So suppose you have a stock that's, let's say, at 60% margin. Well, now it's you know, you're only going to be able to margin 50% of it, and they raise the margin requirements. So what happens? Forced liquidation. People sell whatever they can sell. But the trick here is to keep in mind, let's go back to gold really quick, because this is the one that stands out the most in memory. That's not going to show up. I used the wrong symbol. The thing to keep in mind is that while everything goes down together, with the exception of 20-year, 30-year bonds, they'll usually go up along with the dollar. Take note of what recovered first. Gold. It didn't have as an extreme a sell-off, and it recovered first. So the trick is identify when everything is falling apart. Don't get the warm and fuzzies that gold is going to save you, silver is going to save you if you're all levered up. If you're all levered up on margin, beware, man. Be very, very aware. If you're not levered up, then you should be able to ride out the storm. So don't expect, if the market corrects, that all of a sudden gold is going to begin to outperform right away. It could, but it's probably going to go down first. Some of the leverage comes off, then it'll begin to move back up higher. The banks have been moving around good. Think it continues. As long as the 10-year yield continues up higher, and as long as the 10-year yield continues up higher along with the S&P 500. If the S&P 500 begins to buckle because of the 10-year yield, then, as I just mentioned, everything goes down. So And it's not a net benefit for the banks for the 10-year yield to go up higher, because remember, the amount that they pay to depositors goes up as well. Banks wouldn't short them, at least too much money being printed for them not to benefit. True, but again, as long as the market holds up. How is Texas going to affect the market? More selling. I think short-term renewables may take it on the chin. Let me think of a OPTT. How's that been doing? Because renewables are obviously, they have a lot of wind down in Texas, turbines. If you ever travel through, Palm Springs. If you've ever been through Palm Springs, you're driving across through Route 10, you see wind turbines all over the place. They dot the hills. Same thing down in Texas. Texas has a lot of wind. So OPTT, taking it on the chin this week. This is one of my favorite renewables, but this is an opportunity for me. I hope they take it to the woodshed because I'd like to buy it. So I think what this Texas issue has brought us is a couple of things. One, realism. It's the fact that renewables are not ready for prime time yet. You're still going to need fossil fuels, at least for backup. Now, OPTT, I had my alert fire off here. I'm waiting for this one to fire off down here at around 4.19 per share. So I'm glad I did not act on this. Let's get rid of this. Let's get rid of this one. So we'll be watching the renewables. I think that this is an opportunity to build a list because they're not going anywhere. First Solar, yeah, I mean, hit really hard yesterday. They were down 2.6% on the close. They were down even further intraday. Not a bad close according to this raindrop chart. You can see that the right side of the raindrop, this is a mixture of candlestick and volume-weighted moving average. The afternoon session is the right side of the raindrop. Left side is the morning session. And this, what I like to call it, a pregnant candlestick. And when you see a big fat belly on that right side of the candlestick, it means that you saw buying into the close. And that's bullish despite the fact that we were down. That being said, the first Solars of the world, they're still in trouble. Right? They broke down below key support. So it's good to see some buyers stepping in here, but it's still too soon for me. We're going to be keeping an eye on the renewables as people begin to poo-poo them and say they're not going to work, forget about them. That's not going to happen. Whether you're a Democrat, Republican, conservative, a liberal, technology is technology. It's going to move forward. They may not be ready for prime time yet, but they are coming. So, we need to resign ourselves to that fact, and it's a good thing. So, not ready yet for First Solar, not ready yet for OPTT, soon. In fact, let's take a deeper dive on First Solar. To see where we're at on look at where we bounced off of. The lows of January the 4th, the week of January the 4th, the lows of December the 21st were the lows of yesterday. So does the support level hold? I did not want to do that. What I want to do is I want to create an alert. I want to know if it breaks through, touches, or bounces. And I'm in no rush here because I'm pretty bearish on this market, especially the small and micro caps. I doubt I'll be shorting this. I'll be looking more towards a oversold buy if they sell it off hard. So First Solar pulling back. This is an opportunity. The market was sending you signals back here with all these topping tails that you had selling pressure above. Now it's broken down thus far in the week. Maybe we'll rally back. Maybe we'll close positive. But right now on the week, it's pretty bearish. I would avoid it. Popular SPACs like CCIV and blockchain miners of all shapes and sizes still broke out. Riot is probably 5 Bollinger Bands deep. Let's bring it up. Yeah, because I forget what the phrase is. These are not investments. They're not being bought as investments. They're speculative trades. And sure, this is where the hot money is going right now. But it's a classic game of musical chairs. At some point in time, this music is going to stop because this trajectory, the fact that we're trading above the third standard deviation Bollinger Band and we have RSI where at near 90, this could move up higher. I'm not saying it can't, but this is not going to end well. This is going to correct hard. So for anybody that's going home at night long of this stuff, I don't know how you could sleep. Let's take a look at, I don't even want to talk about valuations. Churchill Capital, SPAC, not as extended. So sure, not everything's going to go down all at once. Topping is a process. But watch these stocks. If these are your favorite stocks and all of a sudden, let's say, this is how you know the market's in trouble. Here's your leading stock. Let's pretend this breakout didn't occur. Bear with me a moment. I know this is not a pleasant chart. But let's say that after we put in this beautiful base, right, nice wedge formation, we broke out. Money goes moving in, buys in the morning. All of a sudden, the next day, the shares, or the next couple of days, the shares roll back over. You think it's going to be a retest of the breakout point. You're confident. You're all good. All of a sudden, it fails. And it breaks down and drops back down into this consolidation range. And then it breaks this 28.99 mark, which was support. Confidence gets shattered. And once you begin to see these types of failures, these failed breakouts, that's a problem. Take a look at PLTR. Everybody back here thought that, wow, we pulled back, retested, we're rallying again. We're going to take out prior highs. Euphoria. Confidence still holds true. Wile E. Coyote moment. And look at this. Lower high, breakdown, sayonara PLTR. So beware. All right, let's go back to the pre-market activity. I'm getting a little bit long in the tooth here. All right, gold. It's gained some. Let's take a look at equities. Russell 2000 down on the session by just shy of a half percentage point. Now, what I want to point out here, 4-hour chart, is that we broke out on a 4-hour time frame yesterday. We could be doing a retest. You really don't want to see more than 3 retests of a breakout point because there's something wrong there. So we are short, for disclosure purposes, we are short of the Russell 2000. I think this is going lower. Perhaps not today, but in the coming days. The NASDAQ 100, of which we are also short of, it is down over 3/4 of a percentage point this morning. Now, what I want to know is, do we break this support level? So our alert is set. This is not looking good, folks. And remember, it's your NASDAQ 100 names that led the charge out of the March lows. We are also short of Twitter. Let's see what that's doing in the pre-market. That's down over $1 in the pre-market. This was an extreme overbought stock. I think that we're coming down here to around $64.50 per share. We'll entertain covering that short at that point. Depends upon the market. If the market weakens up here, then I'll just remain short. As I mentioned earlier, bonds. You got to watch the bond market, folks. I know it's boring. A lot of folks out there that are new and they're like, yawn. What do I care about bonds for? I don't want to buy bonds. It doesn't matter if you want to invest in them. The bond market is the tail that wags the stock market dog. As goes bonds, so goes the stock market. You got to read the bond market. And the bond market, this is the 10-year yield. We bottomed out, but we're threatening another breakdown here. If we break out on the 10-year yield, that means, on the 10-year note, that means that yields are pushing lower. That's good for technology stocks. That's good for gold, silver. If the yield pushes up higher, that's not good for technology stocks. That's not good for gold and silver. The VIX, the fear index. No breakout today. Let's see if we have lower lows on the S&P 500. Where are my E-minis? There we go. We're down about just shy of a half percentage point on the S&P 500. Very close to a break here. Note the head and shoulders setup. I'm drawing the neckline now. Bear with me a moment. I'm doing this backwards. All right, so here's your left shoulder. Here's your head. Here's your right shoulder. Just because we have this forming, left shoulder, head, right shoulder forming, doesn't mean it's going to break. It's not a guarantee. It can get negated. So I'm not saying definitely it's going to break. I'm just saying beware. Be careful. It's not looking good because you have a lower high. We're losing momentum. Copper was ripping overnight. That's a sign of inflation. Let's see if that's coming at all. I mean, it was on a tear. Look at this. It's hardly giving up any ground. Monster. Looks like it wants to go up higher. Platinum. I think we're forming a head and shoulder setup here as well. Left shoulder, head, right shoulder. I would avoid this. Very heavily manipulated at the COMEX, as is gold and silver. Paper silver, paper gold anyway. All right. I'm getting long here. New York Jets, NY Jets. How you doing, pal? All right, folks. I want to say everybody have a great trading day. Join us tonight, 6 p.m. Eastern Standard Time. And if you would, hit the like button, subscribe to the channel. We're going to go over the weekly charts tonight. So I have a link below to get alerted 15 minutes to a half hour prior to us going live. I'll give a prediction in a moment. Costco, good morning to you. And if you're on any of our email lists, don't re-enter it. Right? If you subscribe to any one of those links below, you're going to get an email tonight letting you know that we're going live. So hopefully I'll chat with you tonight. And my prediction, I'll put it to you this way. I started off this commentary with this chart here. And Costco, you've been around a while. Hey Trent, you've been around a while. You know that I've gone over these charts of the 10-year yield, and I've warned, beware us entering a level at or above 1.2. We closed out the day yesterday at 1.29. This is getting hairy. We're also seeing the small caps with ridiculous amounts of money moving into them, or there was anyway. This is unsustainable. In all the history of the Russell 2000, you have never, ever seen this type of price action. This is an index of 2,000 stocks, and pretty much all of them, every single one, is hitting on all cylinders while the economy is in meltdown. So my prediction is that we are much closer to a top in this market than we are to any type of a buy signal. So just beware. I think we're going lower. WS, good morning to you. Yeah, NY Jets. Yeah, man. Dude, I haven't been. And I think that's one of the reasons why I'm not getting up earlier in the morning. I had to get back out in the gym. If the S&P 500 gives, everything gives. Wilshire 5,000 is going to give. You know, we can take a look at it. It's a good question. That's a far more broader market. What's the symbol? I haven't looked at the Wilshire in a long, long time. And my computer just locked up on me here. There we go. Where is it? There we go. Let's go with the index. So what I would point out here is that this is just a daily chart. We'll pull back in a moment to a weekly chart. Just take note of this. We're beginning to see a series of lower highs on RSI. Now, this is not a sell signal to me, but if we break support here, in all probability, the Wilshire 5,000 is going to go. Now, taking a look at a weekly chart, you know, it's obviously because of its design, 5,000 stocks. It's not as extended beyond as the Russell 2000 is, but it is showing signs of being extended here. Not a horrible chart at all. It means strong rally here. No trends have been broken. So the Wilshire versus the Russell 2000 looks far more favorable. But like anything else, if the stock market, the S&P 500 rolls over, so shall the Wilshire 5000. So just beware. All right, folks. Everyone have a really great day, a profitable trading day, and no impulse buying. Watch and see how the market settles out in the morning. And watch the close. Do we sell off into the close, or does the close get bought? Those are your institutions sending you a signal. And with that, again, be well. Talk to you tonight. Ciao.